are not doing. So I have been doing this for 4 or 5 years now, and with very good results. So please have a look at what I have to propose. We are trying to do business in the stocks. So what is business? What do you do when you do business? You buy something and you sell something, that is the trading. So here we are doing that business in stocks. We are buying stocks and selling stocks. So in this, what is our principle? Our principle is to buy at a low price and sell at a higher price. That is how we make our money. So the principle is buy low and sell high. I hope it is clear. The same thing is applicable to other businesses also. So once you are in a business, you need a product, you need a market, you need a supplier, you need a staff, various things you need. In this case, our product is stocks. Let us say we are selling, somebody, you can choose a stock of your choice. Let us say, this is only for an example, you have chosen the stock of Indian Oil. Indian Oil is a very big company, very old company, and it is one of the biggest refiners and retailers of petroleum products, diesel, petrol, all these things. So we have chosen we will go to how to select a stock for doing our business. But for this example, I have chosen IOC. You can choose any other stock which you like. Stock selection we will deal in some other video. So this video I want to tell you only a limited thing, how to buy low. We want to current market price. If you see the chart of IOC, you can open the chart in Google and see the chart. The chart has been in the last 1 year. It has come down from something like 190 to currently it is 135. So if you today you want to go and buy in the stock market, you will get it at 135 rupees 65 paisa, closing price of 1st April 2026. So if you want to buy, pay the money at 135.65 and get it. There is no big deal. Anybody can do it. Any child can do it. So our aim is to able to buy at lower price than this. So how to buy? Think about it. I do it like this. I sell a put of out of the money, that is below 135 rupees price. I may choose 120, 125, 130 or 132, whatever. It depends on your own how much discount you want, or it's your choice. Let me take a price. Are you happy with 120 rupees per share when the price is 135, 15 rupees less than the current market price? So you choose, go to the option chain. I hope you know option chain. If not, please familiarize yourself with this option chain, and you will get a premium for this selling this option. So what we are doing, we are now wanting to buy this one Indian Oil share which is currently quoting 135, 136 rupees at 120. So we sell a put of, let's say this month is April, so we sell a month put of April expiry of strike price of 120 rupees, for which you will get a premium of about 1.5 or something like that. So what is the deal here? Deal here is, you are saying that I am willing to buy this IOC stock at 120 rupees, which is 15 rupees lower than market price, for which you are getting something like 1.5 rupees per share, maybe 1.2 rupees, 1 rupee 20 paisa. The lot size is 4875. That is, you have to buy 4,875 in a bulk. Like you go to a bulk market, wholesale market, that there you have to buy it in bulk, in thousands or in hundreds, or in if you go to a bhaji market, you are going to buy a sack full of potatoes or whatever you want to buy. So here you are buying IOC share. That is 4875 is the lot. So you have to make a deal to buy 4875 number of shares at a price of 120. You have to buy it only if the market price comes down to 120, otherwise no. And you will get this 1 rupee 20 paisa, which works out to about 7,260. So you will get 7,260 like a cashback from this. So your net acquisition cost will be 120 minus 1.1, which is lower than 120. here you will be required to buy that share, this 4875 quantity, if the price of the stock in market goes below 120. Only if it goes below 120, you will need to buy. What happens if it doesn't go below 120? You get that 7,000 odd rupees and keep it and repeat this process next month. So in any case, you have got the money. Now this is the buying part. It may sound very simple and this thing, very simple and easy, but no, it is not so. You please try it with any other stock, be Reliance or Hindustan Unilever or HAL or BEL or whichever stock takes your fancy from the FNO section, and this you will be able to execute. And if you suppose you feel that you must have the stock, you must have it. You can't do without it. You can increase your price like we do in any other market. We go and bargain. So here we are trying to bargain hard. We are going 15% lower or 12% lower. You go only 5% lower. Say that okay, at 130 I will be willing to buy. At 130 you will be able to get a higher premium. Means you will have, if you feel that you have, you must have the share at any cost, you can even go for 135. Because the price is 135, there is a good chance that you will get it. And if you are still very keen, you can go at higher price also. 140 also you can go. IOC. So this is the personal choice at what price you want to acquire this. As you go higher, like if you go for 135, the premium is 5 rupees. So your net cost of acquisition only 130. So depends on your strategy. This is the buying of the option part. Now selling. I will come to selling in the next video, but that will be, I will just give you a hint that selling requires the opposite side. Like we sold a put now, for selling you require to sell a call. That I think you think about this, work out on this and see how you can buy a stock of your choice at lower price. And we will stop here. We will be continuing this buying, selling, how to buy, when not to buy. And our basic idea is to earn money from the stock market easily without going into too many hassles. And I don't recommend doing Nifty, Bank Nifty, this, that, because there is nothing to take delivery or give delivery there. You have to settle. If you have a loss, you have to book it. Once you have booked the loss, it goes out of your portfolio, the money is lost, it's gone. So that is one. Second, don't buy the option. Always sell the option.